The MI inflation gauge, month-on-month MOM, is an indicator that measures the monthly change in inflation pressures within an economy. It is often used as a leading indicator of official inflation data, such as the Consumer Price Index, CPI. The February MOM figure specifically compares the inflation gauge in February to the previous month, January. The MI inflation gauge tracks price changes across a basket of goods and services, similar to the CPI, but often with a broader or timelier data set. It provides an early signal of inflationary trends before official CPI data is released. It serves as a leading indicator for official inflation data, helping policymakers and investors anticipate inflationary trends. Central banks use this data to assess inflation risks and adjust interest rates or other policy tools. Investors monitor the gauge to predict inflation trends, which can impact bond yields, equity markets, and currency values. The gauge typically includes prices for goods and services across various categories, such as housing, transportation, food and beverages, healthcare, and education and recreation. Changes in supply chains or consumer demand can affect prices. Fluctuations in oil, gas, or agricultural prices can influence the gauge. A weaker currency can increase import costs, raising inflation. Prices for certain items may vary seasonally. The MI inflation gauge is typically released monthly, often ahead of official inflation data. It is closely watched by economists, policymakers, and financial market participants. A month-over-month increase of 0.5% in February might indicate rising inflation pressures, potentially leading to higher CPI data in the coming months. A month-over-month decline of 0.2% could signal easing inflation, which might reduce pressure on central banks to raise interest rates. Central banks use the gauge to guide monetary policy, such as adjusting interest rates to control inflation. Investors use the data to adjust portfolios, as inflation impacts asset classes like bonds, equities, and commodities. The gauge helps economists predict future inflation trends and their impact on economic growth. The MI inflation gauge often correlates with the official CPI, but may provide earlier insights. Changes in producer prices can feed into the MI inflation gauge as costs are passed on to consumers. Rising inflation pressures may prompt central banks to raise interest rates. If the MI inflation gauge was 106.0 in February and 105.5 in January, the month-over-month change is calculated as follows: 106.0, 105.5, 105.5, x 100, 0.47%.